Well, good morning, everyone. It's great to see this crowd again. I'm so happy to be here. I'm the white sneaker guy usually, and I have my Bob Marley Adidas SL72s. If you're into that type of thing, first time they've hit the pavement. That's how excited I am to be here. It's interesting to see the energy and or feel the energy and see Peter Renton and some other folks. So it makes me think back to 2015, 2016, kind of the boom time, the high energy time. I can remember 50 Red Jackets of LendingClub, whether that was San Francisco or New York City, in those Lendit conferences. For those that don't know, I mean, most of us realize you've 14 or so years with LendingClub. You've been through the IPO, the purchase of the bank. Can you just type for the folks that don't realize your background, maybe talk through a little bit of background, talk through a little bit of the journey you've had, and then we'll go into more specific questions.
Yeah, sure. So it remains exciting times, I would say. And I have had the privilege of being able to witness and participate in a lot of different cycles, different challenges over the time period. I originally joined as the Chief Revenue Officer, Chief Marketing Officer. Initial task was finding borrowers and finding product market fit, and then quickly the problem became funding those loans. So I took over the capital side of the business, and then the problem became answering the phone and the emails that were coming in from all of that. And so, my role evolved over time. Took over as CEO in 2016, and probably the most significant transition since then was the acquisition of a bank and a bank charter.
No, I think for the folks in the room, the opportunity to hear from you, somebody with an operational background and all the things you've gone through with the charter. Some of the folks have already mentioned about the new administration. I think you're in a unique role because 2016, I mean, you've been through the first administration, so I don't want to keep up with the same questions everyone else has kind of gone through. But I'm curious if you believe that this changing administration will make the environment more conducive for more acquisitions. Everyone seems to believe conducive from a regulatory environment. I try to remind people, things are cyclic. It takes 3 years, 5 years. It's not like flip a switch, but who knows? It might be a flip the switch. But could you go through thoughts that you might have?
I think like 90% of the people in this room are more qualified than I am to opine on that, given everybody's background. I can certainly say what I know. We acquired our bank charter during the last Trump administration. There haven't been a lot of new ones granted since then, so I think there's a real possibility that becomes an opportunity again, which I think is great for the industry. I think is great for consumers. Clearly the market has an expectation. There's a reason why banks were outperformed as a sector following the election results. I think banks were up 6%, Bitcoin's at a record high. We shot up 10%. I mean, distinguishing between what somebody says on the campaign trail and who they pick and what the agenda is, a couple of thoughts. I'd encourage anyone who hasn't read the Project 2025 as it relates to financial services. I did that. There's a lot in there. I have no idea the extent to which that reflects the actual intent of the administration, but there's some interesting stuff in there. I think, what we do expect is a changing of the guard at the OCC and the CFPB and the SEC. I think it is likely that M&A will become a little easier to get done. I think the open banking rule, that's probably near and dear to a lot of people in this room's heart, proceeds, maybe with some revisions. I think the late fee rule probably doesn't go ahead, but that's all speculation. We're going to have to see.
No, I think that's, we're all looking forward to see it, right? I mean, but I think that, go back to the kind of an operational process type of question. There's been some talk about artificial intelligence this morning. The senator talked about it not going away, that it's going to be important and more and more. I've been through the process at LendingClub years ago to get approved for a loan, and saw the algorithm. I wanted to see for myself how it went. Curious, all these years later, with artificial intelligence, how does that affect the business model now? Where do you see it going? Any views into the future for us on that?
Well, I'll start with, you are correct. There was a lot of talk about artificial intelligence. A lot of talk. Anyone who went to Money 2020, that's all everybody talked about. And there were a few very awkward moments when a question came, yeah, no, really though, what are you actually doing? And there was a long pause. I mean, depending on how you define it, I think things like machine learning, as Senator Round said this morning, it's been around for decades. Obviously, we're running dozens of models to power who we market to, what message we send, can we approve them, what do we price it at, what questions do we ask? That's very much alive and in practice and generating real results. Generative AI in financial services, I think it's mostly talk right now, and there are real, I'd say on the regulatory side, there are very legitimate concerns about the risks. I think there's also a risk that we overweight that, because I think the risk of not acting is pretty high as well. There are some implementations that are safe, I think, that are gaining traction. We're certainly using it for things like developer assist for our engineers to increase coding productivity. We're piloting agent assist, so not customer facing, but actually helping agents with call summarization, call flagging, complaint monitoring, next best action. I think those are showing a ton of potential to improve productivity. But like I said, I think I think the potential is very, very real. We are absolutely putting energy and resource into pursuing. The hype cycle is running ahead of actual implementation, certainly in regulated financial services.
We have a variety in the room of banks and technology folks, Fintech, pure. Would you have advice or opinions about, as we go into these coming 3 to 5 years, is it a time to build, or does the answer matter whether these times or before? The decisions about buy, build, or acquire, partner, all those, you've done it. Do you have recommendations for those that are wondering which they should pursue?
Well, when it comes, I think when we acquired the bank, I got a lot of calls from Fintech CEOs saying, hey, how'd you do that, and what does it take? And the answer is it takes a lot, and you can't just wake up and decide it. If I was in the mood to explore it, and we would say it's really transformed the company financially and strategically, because having access to deposits that you can create a new income stream of, in our case, by holding some loans as well as selling. The ability to have a direct conversation with your regulators about what you plan to do does actually open up innovation opportunities. So I would say we would do it again if we could. If it's something that's on your radar, now would be a good time to get going. And between build, buy, partner, I think starting as a partner, that's what we did. It worked great. I'm sure there's somebody from WebBank here. They were a fantastic partner for us. It allowed us to find product market fit. It allowed us to scale to be one of the largest lenders, personal lenders in the country, and to leverage their compliance expertise. But once you get to a big enough scale, or at the time that we made our move, we had more compliance people at LendingClub, I think, than WebBank did, right? Because we needed to do that for ourselves. Then you have the buy or build. We looked at build. I would say the process, if you think about build versus buy. We were lucky with the buy. We found a bank called Radius Bank that was a unicorn for us. It was for sale. It was a size that we could afford. They had already gone digital, so they had closed all but one of their bank branches, so we were not taking on this kind of operational burden that we would have had no idea how to administer. And we acquired, they had $2 billion in deposits that we could put to work and a profitable balance sheet, and we got the whole thing done in 11 months. So I'd say that's a happy path. The build, the challenge with build, the opportunity is, hey, you get to start from scratch and you're not inheriting somebody else's systems and all the rest. The challenge is the expectation of the regulators is that you've got the policies, the procedures, the staff all in place, and the systems all in place before you get approved, and you don't know if you're going to get approved, and you don't know how long that's going to take. So, the few examples we have of de novo, I don't know if Colin is here from Varo, but I think he said that took him 3 years and it cost them $120 million. So that is not an easy path.
No, and we've talked about that being a very arduous path. One thing that we haven't talked about, and I haven't heard today, but you just mentioned it, kind of brought it up. As a former regulator, and I know we have plenty of them in the room, do you communicate with your regulator? I know that you have that as utmost importance in your organization, but can you just kind of talk about that? Almost once a week, someone will ask me that question, and because they're hesitant, they don't want to talk, they don't want to communicate with the regulator. So it'd be great to hear.
Yeah, no, we've taken very much the opposite approach of that, which is frequent, constant, ongoing communication and transparency. No sudden moves. Nobody likes surprises. So telegraphing what we're doing, why we're doing it, when we're planning to do it, how we thought about the risks. When you are a new bank, you go into an operating agreement which sort of governs what activities you can do. You write a plan, and that plan is concrete, and you need to adhere to that. And can you change it? Sure, but it requires a process to change. You can imagine we made the bid to acquire Radius in February of 2020. COVID hit in March or April. Do you think our plan changed a little bit? It changed a lot. And so what the operating plan forces is a bit of discipline around thinking through what you're going to do, communicating the changes, and that for us continues to this day. And I think it's really benefited us because there's a level of trust there, and there's an open dialogue. And we've found the team we've got who cover LendingClub, there's a lot of them, but they really understand our business and they understand what we're solving for. And we have found we are able to innovate. We just have to communicate what we're doing, why, and how we thought about the risks in advance.
No, I think that's great advice. And I know I kind of jumped in this abruptly without a bunch of introductions and stuff because, frankly, I think it's a waste of time. You're here, you know who everyone is, and this group has always been to help each other. There's no reason to make the same mistakes over and over and over, and this is a very wonderful way to facilitate it. So I wanted to pause for just a second and see. We don't often ask the audience if you have questions, because it's a scary thing, right? But if someone has a burning question, let's have it. If not, I'll continue on, because I enjoy hearing myself talk. Yes?
Hi, Kathy Brennan at Hudson Cook. This
We've-
is a great panel, but I would love to know what you think about the likelihood of the national rate cap, because obviously that is something that would be not super good for lots of people in this room.
You mean the credit card cap that was talked about? I think, again, who knows? My guess is that was talk. I think that's pretty unlikely. I think the consequences of that would be pretty catastrophic, and I don't actually think, in the world of unintended consequences of well-meaning regulatory action, that one would be a doozy.
Yeah. It's been years since we've seen each other. It's nice to see you, Kathy. Any other questions? Okay. Well, then I'll go back to mine. The next thing I wanted to ask is, sir, is what keeps you up at night? What worries you? What do you see on the horizon that either troubles you or you're just trying to lean forward in the right way to solve for it?
I mean, now that we are on the downward side of the rate cycle, I'm certainly sleeping a lot better. For our business, we're set up pretty well. Unfortunately for consumers, there's currently record high credit card debt. I think it's 1.3 trillion. It's priced at, which is the highest it's ever been. It's priced at the highest rate it has ever been priced at. I think the average rate on credit cards now is like 23%. And so for us, our core value proposition is if you didn't pay off your credit card last month, which half of all consumers don't right now, we've got a better product. You have a loan, it's a terrible one. Ours is better, it'll take you less than 2 minutes. Your FICO score will go up, you'll save a lot of money. So we feel really good about, the environment in front of us. And so I think there's a lot to be excited about. Still somewhat cautious on, do we pull off the soft landing? And all signs seem to be pointing to that, but have to watch it. I think we're certainly seeing that the pressure on the consumer has moderated, but things are stable but elevated, I would say, on the credit side. So need to watch that. But in general, feel pretty excited about the next couple of years.
No, I think that's great for all of us to hear. I really don't like giving the nebulous, how do you feel about the coming 5 years or things like that, although, it's a good question. We all like to hear people look towards the future. But just any other topics, we've gone through a range kind of. I've started firing at them because I want people to get every minute that they can from your experience. Just anything that we haven't talked about that you would like to.
I mentioned open banking. I think we're in a unique position because as a fintech, we stand to benefit, right? If you think about, what is the promise of open banking? It's giving consumers access and visibility and control over their data to try and, break down some of the barriers to switching and encourage competition and innovation. If you look, I just talked about credit card debt. What's a staggering fact is half of all Americans don't know the interest rate on their cards. And of the half that do, they're wrong. They don't know it. So the majority of people don't know the interest rate they're paying on their cards. That's their debt. Then you go over to their savings. Wells Fargo, Citi, Chase, Bank of America are all paying single-digit basis points on their savings accounts when, LendingClub is paying 5%. Like, how is that possible that you would let your money sit in a savings account earning 2 basis points when you could earn 5? So we stand to benefit from, more transparency and the access to data. However, we're also going to be a data provider, right, as a bank. And so we're also sensitive to this idea of, for those of you who don't know, there are pretty material requirements of banks to oversee third parties to make sure that they've got the right security infrastructure, the right privacy infrastructure. And so there's a little bit of gray right now of, hey, people request your data, you need to give it to them. What if they leak that data, and who's responsible for that, and who's liable? And if the answer is going to be the banks, then yowza, that's going to require 4,000 or 5,000 banks and another however many thousands of credit unions there are to due diligence on a bunch of small fintech. So I think there's real opportunity there. I'm hopeful that and potentially there's an opportunity for a bit more clarity around some of those lingering questions to make sure this gets implemented and we get the benefits that I think are possible.
No, I think that's great. One last call for any questions? Yes, sir.
Scott, when you think about the regulators' opposition to you initially getting the charter, was it the fact that you were going to be a monoline where you're going to put, thank you, consumer loans on the bank's balance sheet? Was it the fact that you're going to put potentially subprime? What are the things that the regulators are mostly concerned about when a fintech is acquiring a bank?
I mean, I think I would say, first, at that time, we felt that the conversations were pretty constructive. there is a very real statement which continues to this day, which fintech equals risk in DC, and that is not going away. So there's just this heightened sense that somehow you are going to be riskier, and what we tried to do as part of our process is show, actually, we look quite a bit like a lot of other companies that you are already familiar with and you already regulate, right? At the time we acquired the bank, I think we'd done 80 billion in loans over 15 plus years, so we knew how to manage credit. We had the results to demonstrate that. What we couldn't demonstrate was, did we know how to safeguard deposits and manage money movement? So for the lending side, there are models out there they could point to, and if you're a more concentrated lender, then you have different capital requirements. But hey, have you met Discover? Have you met Cap One, right? There are other institutions that look a lot like that. But the question is, do you know how to manage money? So, we added to our board some people with really deep hands-on bank expertise who've been bank CEOs, bank treasurers. And then the acquisition of Radius actually helped because we could say, hey, we know credit. We're clearly good at that part of the business. So the asset side, the liability side, here's an institution that is already directly supervised. They've got the team, they've got the processes, the policies, the procedures, all of that is in place. So in fact, a little bit easier to get comfortable with because it existed as a regulated institution already.
Anyone else? Anyone else? Okay. I think I speak for everybody. I appreciate you making this long journey, sir, and being open and frank in this discussion. This is the type of thing that's helpful to all of us as we look forward to what are we going to do next, right? What are we going to be involved in next? So I
Great.
appreciate your time, sir.
All right, thank you.
Okay.